Afternoon, how are you all doing? How's everybody? Getting windy here. Got a storm coming, like a good storm. Afternoon, Amy, Ian, Emac, Harold. Afternoon, Julio, Emac. Good afternoon to those in different time zones. Afternoon, John, Leo, Gregors, Crum, David, Paolo, Virginia, Day Trader. How we doing? Afternoon, Alex. So good moves today on the New Zealand anyway. Afternoon, Mumo. This afternoon I've banked, or just a minute ago, I banked Euro New Zealand, one position, put it in the Telegram group. But basically we hit 125 ADR. Got out of a part of that position, which I will add back on again if necessary. So obviously when you're position trading, when you get stuck in stuff like this, it makes sense to take things off when you get down to areas that we might bounce at. So we're stuck in a range basically here. So there's potential for this to be a continuation in this range. So I've taken that position off there, put that in the bank. If it pushes back up again, I'll add it back on. If it doesn't, I'm just going to go down to target anyway. So just banking as we go basically. I've also got Euro Swiss, which I'm going to take off. I think it's so close to my target. And it's another 0.25%. So I'm just going to bank that as well because it's too easy. Straight in, straight out, one day trade. So might as well just bank it. 0.25% done. No pressure on it, is there? Oil is moving very nicely as well. So we've got that bounce play on oil, which is good. So this is the low and that's the double bottom, and I'm expecting us to come up and retest that high and then retest that high and then jump off to $100 a barrel. So this is a perfect spot to be buying it from. Got two positions on down there. Average is there. So I'm taking one off when we get to those highs. Taking a second one off that propulsion gap, which then means that one will be in profit and then be looking for a move up into those highs. So we'll see where we go with that. But oil's started to make a nice move. We've got oil inventories at 2:30 this afternoon in roughly an hour. Just had a nice mistake on the NASDAQ. So DAX was a really easy one today. That was your opening range break, straight down, straight to target, easy in, out, and done. If you remember that, if you were here this morning, I had the DAX, the NASDAQ from yesterday. Basically, I forgot to adjust the close time on the EA. So it didn't close out my hedge yesterday. So I closed it out this morning, got out of it with a nice little profit. Do you remember this morning when when I took this short? I said, if it breaks up, I will re-hedge it. I put those pending orders in the market, totally forgot about them. Shut the platform down, booted the platform up literally about 10 minutes ago, and those longs I'd put in to trigger the hedge triggered on the news. So I've just banked $1,000 by accident. So I'm up to 2.17% for the day. Nice when you get mistakes like that, isn't it? But yeah, anyway, so there you go. Everything else is just flip-flopping around at the moment. So that's 1% bank today there. What was I going to say? News. So we've got 3 minutes to the open. We've just had the non-farm employment change come out as a negative on the US. So the US is having a little bit of a drop, not much. We've got PMI, manufacturing PMIs coming out at 2 o'clock. So half an hour after market open, we've got those PMIs coming out. That's the only news this afternoon. JOLTS job openings and the manufacturing PMIs at 2. And then 6 o'clock tonight is the rate, which is what we're waiting for. So fair bit of movement today. Quite a few ADRs. So we'll have a look at those in a minute. Sorry, we're having one sec. So we'll quickly look at the indices. So we've had news this morning, which has obviously rallied this. So the open today might be a little bit whippy. We've got news in half an hour and we've had a rally. So the market's a little bit exhausted. We're miles away from ADR though, as you can see. So NASDAQ miles away from the ADR. So we've got plenty of distance on all the indices to ADR. So just going to play it like a normal day. But as you can see, we're in the middle of a big bull rally, basically, on that US dollar drop. So might be a bit of a whippy open, but we'll see. So just play it by ear. And then when we know which way we're breaking, we'll have a look at where we're potentially going. There's no immediate resistance or support on any of these at the minute. So we've broken above yesterday's high on everything. So it's just a case of up. It's either pre-market lows to the downside or up. We just go up wherever we're going. So we'll see where we go at the open. So just to get my other terminal open, ready to go. So we've got 55 seconds. Afternoon, Dion, Evans, Brian. Cody, 6K in the last few days from a couple of mistakes. I know, it's brilliant, isn't it? Afternoon, Kennelly. Yeah, so I fat fingered was it on Friday? I accidentally got in, or Monday. I know it was Monday, wasn't it? I accidentally got in with the lot size from the S&P on the Dow. So I accidentally took a 75 lot trade there instead of 18 or whatever I normally take. And it worked. So I banked 5K by accident on the Dow on Monday, and I've banked $1,000 today by accident. But just goes to show, doesn't matter which way you go, does it? Press the button. It's either going to go into profit or it's not. Totally random. Okay, markets open. So nothing on yet. Long NASDAQ. So triggered on the longs on the NAS. Where's the short on that? Below that candle. I'm just going to put some hedges in place on my manual platform. Not a lot of volume. So the market's a little bit tired after this. We've just had a big rally, obviously. So there's no massive moves going off. Market's a little bit tired. Usually is exhausted on news days. So that's what I mean. We might get a bit of a whippy open today, which will be unfortunate, but we'll see. Short on the Dow. Afternoon, Mac. Looks like I'm just about to trigger short on the S&P as well, which means the NASDAQ will probably hedge if that does trigger short. Not quite. So we're just tapping into that level on the S&P, which is holding at the minute. Evan, haven't tuned in for a while. I see you're using a new version of the opening range and have it available in MQL5. So it's a different variation of the RBEA. Yeah, so basically this is they're called the stock index hedge strategy. So watch the video on the website. It'll explain all about the strategy. But basically it's just a variation on sorry, I was just saying the wrong terminal. It's just a variation on the opening range breakout strategy, but it's designed to just make it a little bit less stressful. Opening range breakout is a great strategy and it works very well. When it doesn't work very well, it's incredibly frustrating because you get multiple stop outs and you can, which is why there's a loss limit in the ORB EA, because you can easily hemorrhage 4, 5, 6%, depending on what risk you're using. If you get a whipsaw open like that, it kills you. So the idea of the stock index hedge EA is if we don't get the break, if we get the break like we did this morning, you get the break, you hit your target, you're done, brilliant, all out, 15, 20 minutes, you walk away. If you don't, you hedge the position and you wait for price to decide which direction it's going to go. So there's one or two things going to happen. You're either going to go into a rotation day, in which case it's very difficult to make money, or you're going to go into a trend day and it will make its mind up eventually which way it's going. When you know which way it's going, you can easily pick a support resistance area to TP, and then you get out on an exit on the pullback to make a profit. So it's a variation on the volume you get at the open. But it's explained in the video, the strategy. I find it much more comfortable to trade than ORB. Just different. Everybody's got a different sort of comfort level in trading and strategy. And this is much... I'm getting old. I don't want all the excitement of trading 1 minute charts and scalping, and just want to sit there and either get the money in the bank, take it, walk away, or not. I want an easy life. I just want to make my money in 20 minutes and go and do something else. Which is never the case because I'm always in here. But anyway. NASDAQ is trying to break long. The Dow is trying to break short, and the S&P has got no idea today. So there's your 5 minute opening cash balance on the S&P. It's within the 15-minute pre-market range. I just can't get anywhere. So Dow's definitely breaking short. A divergence on the NAS. NAS is going that way. Dow's going that way. I suspect one of these is going to take control in a minute and we're going to just get a run. But hopefully we're not waiting until 2 o'clock, because that would be painful. That means we probably will get whipsawed and hedge everything, which won't be good. Let's see where we go. So bear with me a sec. So I just want to see, I will have a look at the FX in a minute, but I just wanted to see if we do actually get a break on, or whether we're going to get a bit whippy. Before I go and have a look at the FX pairs. Okay, DAX has gone long. S&P might try and break long on this. So just getting ready to enter a long on the other account. It's not going anywhere, is it? Okay, I'll leave it there for a minute. We'll come back to that in a sec. Right, so oil, as I said, we just double bottomed on that. So we'll go through the ADRs and have a look at what's going on with the FX at the moment while we're waiting for that to decide where it's going. So ADR hits today, there's quite a few. Weeklies, we've got quite a few. A lot of these are yens. So the yen today, no real movement at all. So we've just stuck basically at the moment on the yen off that 300 ADR plus move. We're sitting sideways at the moment. Again, market's gone into a little bit of shock, which it tends to do after we get these big yen moves. So there's nothing really to look at there. Most of these weeklies you'll find are yens, so they're all good mean reversion opportunities. Aussie dollar, New Zealand dollar has hit today. So that was a hit to the downside. That's bounced really nicely. Look at that, speed of that bounce. So you would have found it very difficult to get a reversal on that. Yeah, some crazy order came in. I think that was probably on the news. 210. Yeah, so that was off of the that was a build up to the non-farm employment change numbers, and basically just completely reversed that whole move. So you wouldn't have got into that one, not really possible. That was with the reversal alert there, so that was the long entry. But I mean, that's not really an ADR reversal, is it? That's just a mess. Euro-Odd. So that's a nice push down. We're just about to get the reversal on that one off of 125 ADR. So you're just about to get the trigger on that. That's 125 ADR. Obviously, this Australian dollar and New Zealand dollar are rallying off the back of the news this morning. So that's a nice hit there down at support. So this is the low from last week. So we've tapped straight into last week's low. They've bought that up. This other line here is the low from 3 weeks ago, I think. 2 weeks ago. So that's your 2 week low, last week's low, limit orders triggering. So look for a push back up into there. Your reverse alert's about to trigger on that any second. Obviously wait for it to trigger. Oh, nothing can make its mind up where it's going at the moment. Euro New Zealand. So that one's hit the downside. We've just had a reverse alert on that one. So I've just taken that one off because we hit 125 ADR. There's your reversal alert. So you can look for a pullback on this one. Potentially this is a range low. So it's that level there. If we're going to maintain this range, just going to bounce back up from here. So if this is going to be I mean, this is probably the biggest, strongest move we've had. Look, non-stop selling all day. So there's a potential for this just to pull back and then break and try and do a price discovery, move out the lows back down into this bottom. So that's a good looking long, but you want to take a quick scalp on it just in case it does break to the downside. Pound odd. So that's a nice hit to the downside, 100 ADR. That's just about to give you a reversal alert as well. Just about to trigger there. That's off of that previous week's low. So that is the 3 week low, 2 week low, last week's low. Yeah, so this whole area here is the range low. This whole area here is the range high. Just flip-flopping around inside that range. We are actually making lower highs here though. So it's a contracting, symmetrical triangle, descending wedge, which is bearish. So might get a little bit further. Much nicer to take a long from there and then get out there in case it pops back down again. But that is a long opportunity as well. You got the pound New Zealand. Nice big hit to the downside. Again, coming down into potential lows down here for a pullback and then potentially break down. So nice reversal alert potentially there. Just had the reversal alert on that one. Literally just triggered. So we're looking for that second leg now. And New Zealand dollar CAD. That one's hit to the upside. Not very good, that one. It came off of ADR very nicely, but this price action's a little bit odd. So this area here, basically, we tapped up into, but this price action is really weird last night. So it has hit that high. There's your leg. So potentially short there, just play it back down into propulsion, just in case that's a leg up, which it could well be. Canadian dollar's rallying, obviously, which will help off the back of oil. But New Zealand dollar's rallying off the back of its news overnight, which was the unemployment rate. So I'm not quite sure why it's rallying off of that, because it's not a particularly good figure, but anyway, it is. So 1 second. Okay, NASDAQ's broken to the highs. The Dow is still struggling out these lows here. Typically, indices tend to all run in the same direction. The fact that this is breaking so hard and the S&P is turning around, I suspect the Dow might get bought out of this level and try and rally up, which means that would get hedged. So what I might do, if this gets to target and this is still sitting in profit, I'll probably just close that out because the S&P will break long. So if I can get a TP on that one, break even on the second position, S&P will break long. If I can get out of that one, actually that's breaking down now. Real difference of opinion today, isn't it? Just trying to get a profit out of each of them, really. $1,800 profit there. So I'm just about to hit target on my proper valuation. Yes. I'm at 53,700. Target's 4K for the evaluation. I just got to watch this. Basically, target is 4K. I'm on 53.6. So I need that to rally a little bit more, and I need that to push down a little bit more. I'm not going to take an S&P at the moment. So if that NAS can get a little bit more of a kick up, and we can get a bit more of a kick down on the Dow, that will hit target. But the trouble is these are pulling in opposite directions. Typically, they'll both go the same way. So I'm kind of, one of these is going to fail. I don't know which. So I'm not sure which one to shut. Can't make that decision, can we? But and they're both pulling back. Typical. We've got some volatility coming in now. Quite a bit of volume came in there. New broker. No, this is a proper valuation with Alpha Capital. Come on. Right, I think this is going long. I'm going to close out the Dow. Because the NASDAQ's rallying, the S&P's rallying. I think the Dow's going to go with them. So I'm shutting the Dow. I'm going to close those buys on the Dow. And NASDAQ's going to hit target. So I'm just going to repeat that over here. Quick. Okay, long on the S&P. Sorry, too much going on at the moment. Too many accounts. 53.6. Right, so I'm just going to let that NASDAQ run. So I need 52.5, 1.5K. 8. TP 516. There we go. So if that NASDAQ rallies long, which it's now probably going to reverse on me, typical, that'll be an evaluation pass. Typical. Anyway, $300 bank there. Long on the S&P. See if we can get this push out the high. Want to kind of hit target if possible within the next 10 minutes because we've got news coming up at 2 o'clock. So if that hasn't hit target by 2 o'clock and we're still sitting flip-flopping around, I'm going to close that because there's no point in potentially taking a massive drop on it in case we get news. What's your strategy for passing the challenge? You're watching me do it. What's my strategy? Paolo, you've come in here every day. You see me trade every day. What's my strategy? Same thing I do every day. This. Stock index hedge strategy. Or opening range breakout strategy, whichever you want. Both the same thing, really. Come on, let's just have a quick pop. Pop up. That'd be lovely. So we got this high coming up. I don't know what that is, that line. That's 2 week ago's low, so it's not really a level. So there's not really anything. We've got this accumulation here that we're sort of tapping into now. Other than that, we're looking at coming up into this propulsion gap. So this accumulation break, that propulsion gap is ADR today. So if we are going to continue a break to the upside and we're going to run long, that's where I'd expect us to get up to today, which is just shy of ADR. But the news is going to obviously make a difference to this one. So this is either going to get carried on the news or it's not. Come on, $300. I hate it when you get this close to passing evaluations because it's like, do I shut this right now and take... I'm $400 short a target. I can just take this now and go, right, a couple of $100 short. Or do I hold this and watch it get hedged? Hate it when you're... This is the problem with prop. This stops you trading properly. I'm not trading rationally now. I'm trading to hit a £4,000 target. That's not how I do trading. That's not how you do trading. You don't go, oh, I've got to make $4,000. You know, it completely changes your mindset to each individual trade that you take. I'm sitting there now watching this going, I just need another $300. When would you ever sit there and go, oh, I just need you to move another $300 and I'll close you out? It's not how it happens, is it? It's the mind games you get played with prop. I'm going to move this to break even on the prop account because obviously what I don't want is that to go into a negative. Now I can't get an order execution either. Why are you not letting me execute this order? God. Sorry, one sec. Right, sorry. So still long on the S&P. That was the right decision on the Dow today. Back to prop. What do I like about them? Not a lot. They gave me an offer, Mumo. So they're all the same. All these prop firms are pretty much the same now. So as long as they've got end of day drawdown, they don't allow EAs. So, but then again, the ones that do allow EAs moan about you if you pass with an EA. As soon as you get to take payment, they go, "You're using an EA." You said, "Yeah, you allow EAs." "Yeah, but you didn't run it past us." Just they're all anything but to pay you, isn't it? But they offered me 25% off, so I took it. Literally, that's it. They all do the same thing. They're all crooks. It's all rigged. Got to pick one, haven't you? Am I trading the new 750 at the same time? Yeah, that's, well, I'm not trading that. The EA's trading that. That's that one. So that one, I've left the Dow on. I'm not touching this. This is just trading away on its own. Okay, we've got 7 minutes to the news. We're starting to stall out a little bit on this. DAX is coming down really hard. Look, I'll give it another couple of minutes, then we'll have a look again. Trade your strategy, not your account. Exactly. But it's very difficult not to trade the account when they set you a target, which is the account. Annoying. NAS coming into the October the 23rd's open. Oh, you and your opens, Brian. You're going to have to send me some factual information of 10 years worth of backtesting to prove to me that the open of another day that has in the past over 7 days ago has got anything to do with what's going on right now. I don't believe it. Sorry. But if you have data to back that up, I shall more than happily have a look. After your testing, which Forex account do you recommend? Prime. I get faster execution and tighter spreads on Prime than I do on ECN. It's marginal. It's not a lot in it, to be honest. I just am using Prime and I'm getting just. I'm also, one of the main things I'm finding, the spreads are. I mean, if you look at the spread on the NAS there, which is virtually nothing. If you look at the spread on the Prime account here, it's tiny. Look, there's hardly anything in it. The Prime spread is a little bit more fixed, less variable. This will vary a lot. This doesn't. This is more fixed because they're charging you a commission. But what I do find is the connectivity to the Prime servers is better than the ECN. I get dropouts on this a lot more than I do on the ECN. Not a lot in it. I'm cutting I'm cutting this NAS. I'm cutting one. I'm banking this and just locking in this profit. Price action slowing down. We've got news coming out in 5 minutes. So what I'm wary of is this pulling back and then suddenly we get that news that dropped. I'm going to get hedged on the S&P if that happens. So I just want to lock in some profit. 2.5. Oh yeah, because that's my fat finger from earlier, isn't it? That accidental. So yeah, just want to lock in some profit basically today. We've got news coming up, so that's not going to pass the hedge fund, unfortunately. I'm going to end up about a grand light if that pulls back. If it rallies, though, I'll hit target. In fact, I need to just adjust my TP up a little bit. I'm just moving my TP up to a whatever, up near ADR. So if that news event that we've got coming out spikes, that'll be a pass. Well, the bottom of the open is holding almost to the tick. Yeah, that's fine. Brian, 10 years data, proof. Something that happens every now and again. I can always find, you give me any chart, any turn, and I can always find a reason for it. There's always a reason. Always. Every time you see something moving and turning at a specific point, right? This is at the moment here, right? It's bouncing off of that level there. Actually, it's bouncing off of that wick and that wick. These two wicks are exactly to the pip where we're bouncing right now. You can always find every moving average, every single moving average. If I put any moving average, you can pick a moving average at random. I will find a bounce at that moving average. And you'll go, that moving average is brilliant. There's always a reason. But if something happens over and over and over again, repeated, it's usable. But the open of a day a week ago, don't forget the open as well isn't the actual open. The open is just a price that happened to be where we were sitting when that bell rang. How can that possibly have anything to do with the other movement a week later? Just don't get it. But I'd love to be proved wrong, because if you can use it, I'm definitely up for it. But I don't use it in futures, so I just, if they don't use it in futures, it's probably not good enough to be used in anything else. We're just pulling back on the NASDAQ. So we've got 2 minutes to the news, or 1 minute to the news. Did you say Robo Forex have zero commission? It depends which account you select. Go and have a look on the website and compare the accounts. Some have commission, some don't. Prime has commission, but you get tighter spreads and fixed spreads as well. Not fixed, but as fixed as you can get rather than variable. When they spread you like that at news, don't get that spread on the Prime account. You will on an ECN, because ECN is variable spread. That is still variable spread, but they're making their money out the commission, not out the spread. So that it's not in their interest to spread you. It's in their interest to get you to trade and charge a commission for each trade. Just had an alert go off. One sec. Pound New Zealand, 150 ADR. New Zealand is still on the run. Look at that spread. See the size of that spread now? Before the news. Huge. See how that's spreading? There we go. So we're off to the upside on the S&P. NASDAQ's not moving. It's frozen. So that looks to me potentially negative news. 9.5 on a forecast and 9.4 for jolts. That's negative. And we've got manufacturing down as well. Oh, no, it's positive, sorry. That wrong. 9.3. So 9.5 off of 9.3 forecast. So there are more jobs available. BMI is the important thing. That's down. So that is negative US. So we'll see what we get reaction-wise. Bit of a spike up, but it's retraced very, very quickly. So has anybody heard of, I was just going to say, Brian just said, using it on futures just sucks. I can't use the MRA since I'm on Ninja. Don't trade futures, trade CFDs. I was going to say, has anybody else heard of the open having any relevance on price? I know the open on the day does. In the futures market, a lot of platforms, including Jigsaw, which I use for futures trading, that marks the open, and the open has a relation to price because it's part of the volume weighted average price, the open, because you get a large volume at the open. It's also part of the volume profile. So, but previous days opens, I've never heard anybody ever talk about them as being any relevance. So be interested to know if anybody else knows of any strategies revolving around previous opens, because you can easily plot every previous open on the chart. Trouble is then you're going to have loads of lines on the chart, and you're going to be forced to take trades at those lines because you think something might happen. It's the downside, isn't it? Okay, so we're getting a little bit of a rally off of that. I should imagine we've got a US dollar drop happening at the moment. There we go. So we'll see where that goes. It's just a whipsaw at the moment. Come on. I just want to pass this proper valuation so I can get on to the next one. I need $700 now. 600. $500. Countdown. I needed to break the highs, basically. I need the NASDAQ to go. NASDAQ needs to run. It is 4K, isn't it? Oh, God, I need to check. Hang on. 50 grand. This is doing maths times 8% is 4K, yeah. Double checking. Before I close it out at 4K profit and then they go, no, you missed target, mate. Come on, NASDAQ. Wait, proper valuation. I just joined. What did I miss? Nothing much. I've just been running a proper valuation this week on Alpha Capital. Just getting ready to get out of the S&P. I don't like this price action. We're trying to buy a lot here, and they're not making any progress whatsoever. We ought to listen to Tick Strike and just see if we can hear what the market's up to. Just refresh that. Bearish. I'm closing the S&P. There's a lot of selling coming in. I don't want to jeopardize this. I just don't want to lock a hedge in today because I've had a lucky day today. So I've got a feeling this is all going to stop and reverse. So just going to call it there. Out flat on the NAS. So I'm still a grand short on the prop account. So I'll come back to that again tomorrow. A lot of selling coming in. So flat on everything, basically. So took one and a bit off of the NASDAQ. Tiny loss on the S&P. Tiny win on the Dow. DAX was a nice, clean, easy break today. So should be really 1.7 on the day. I had a lucky trade on the NASDAQ. But don't like the sound of the sellers at the moment. This candlestick across all of those markets, basically, we had a lot of attempts to go long, and you could hear on Tick Strike, nothing but selling going on. Haven't heard any buyers, still can't hear any buyers. When it goes quiet like this, you have a load of selling, then silence. This means there's not enough buying in the market. So this could go either way. This could break long, it could break short, but there's a lot more sellers at the moment. So it just makes sense to not risk it. Profits locked in, so it might break long still, but that's got to come down. And that is not bullish for indices. That's bearish. So I'm calling it there. Is it step 1 or step 2? That's a step 1. So 1 sec. Yeah, so that's step 1 evaluation, which is why I'm being a bit cautious with it as well, because I just want to get it done. I tend to go in fairly aggressive on step 1s because I just want to get it over the line as fast as possible, then sort of slow down a little bit on step 2 because you've got less target, so reduce risk a little bit, so there's less chance of blowing it, and obviously trade normally when you get it over the line. Put some weights on you, Jay. That's not going to help today. I don't think that's going to help today because this thing's not going to move until FOMC. So even if you put a 100-ton weight on top of that today, the chances of the Japanese doing an intervention ahead of a major interest rate decision on on the US dollar is just not going to happen. So we got to wait on this one. I'm hoping we get a negative reaction off the US, which will help this down. If we get a positive reaction, I think we're just going to get that intervention probably tomorrow. The Japanese won't let this go above there, I don't think. When we get to that 152, it's a psychological line in the sand. That is where they did it last time. So for them, it will be psychological. It'd be like, no, not again. There is a line. They keep saying it's volatility and volume of movement and speed of movement. There isn't a price that they're worried about, but there is a price, isn't there? That 150 was a price. They started talking when we got to 150. I don't see why they won't talk when we get to 152. So I've just got all the trades open still on the other account, all still long. Is what you're doing similar to a data analyst's job? Does or do Excel worksheets relate to impact your thought process? No. What? I'm trading. So is National Hockey League a sport? Sam, I've no idea what you're on about. I think you might be in the wrong group, mate. This is a trading. I'm trading. I'm not doing data analysis. No. I think that might be the weirdest comment I've ever had in chat. Don't want to be the odd person distracting chat away from the relevant talking points. So is National Hockey League a sport? I have no idea what you're talking about. Sorry. Did you miss my question, or was I not paying attention? AZ, did you say Robo Forex have zero commission? No, I answered that. They don't have zero commission. They can have zero commission. I said, go and have a look on the Robo Forex website and compare the accounts. They're all different. Thought it was also about car repair. I could talk about car repair. I don't know much about car repair. I do know how to change a tire, although I don't need to because I've got a gas canister that inflates it now, so I don't even have to change tires. But anyway. We are off on a random tangent today, aren't we? Buyers coming into the market now. We are off potentially to the upside. So should have held, possibly. I don't know. This is 20 minutes now. We haven't really gone anywhere, have we? So I'm quite happy to be flat, to be honest. Not not really any direction. This could pop either way. Afternoon, Tammy. Right, let's get on to FX again. Jumping around a lot today, sorry. This is very difficult to trade so many accounts at the same time. I'm finding it quite challenging to do everything at once. Sorry, I just got to watch the Dow because I've got a hedge on the Dow. US 30 rejecting off of yearly close. Brian, Matt's taking the mickey out of you. Aussie dollar Swiss is extended on the 4-hour RSI. Still moving. Swiss franc still weakening, which is good. I'm short on this with 2 at the moment, so this is really extended now. We had a little flag break on this, and we're still pushing up. So there's potential for us to get back up into those highs. Market's rallying. So yeah, still nicely extended. We're above the 75 level, so we're just about to get an even bigger extension on that one. Aussie dollar obviously rallying off the back of the New Zealand dollar figures. US dollar Swiss is rallying as well. That one's just coming out of extension. First entry taken on that one yesterday on the H1M5. Target is down at these lows, although there's a possibility we might break off that high. But this trade basically is in the hands of FOMC this evening. So everything you have on US dollar at the moment is literally, it's either going to pop or it's not. There's nothing you can do about it until we get to FOMC. So I'm just looking at my P&L. Why is that so out? US 30 buy, US 30 buy, US 30 sell, US 30 sell. 17. Okay, don't know. So nice rally going on at the moment. We're just testing new highs. S&P just about to break new highs. Dow has just broken new highs. NASDAQ still short of the highs at the moment, but all trying to rally out the highs now. Decent movement across the board. So if you are still long, we're out the highs from yesterday. So your upside target is basically just shy of ADR today, which is the previous week's high. So that would be your first level of resistance on the Dow. S&P, we looked at this one already. This level here potentially could act as a resistance. Failing that, though, you can pick a level in here. This is a nice area of 3-day balance. There's absolutely anywhere in there you could find resistance. So the S&P is a little bit more tricky. And the NASDAQ, very much the same as the S&P, but that propulsion gap is a lot cleaner. So that previous high there, which turned into support, we then broke that, retested, and that propulsion gap will act as a target to the upside. So if we do continue to break long, there's plenty of room to go on everything but the S&P. The S&P is the one that's going to find it a little bit more tricky to get up today, I think. Everything's sort of running out of steam a little bit anyway, but no sellers coming in. You can hear, that's the beauty of tick strike. You can hear there's loads of buy orders coming in. When it goes quiet and the market doesn't push down, it means there's no selling volume. So you will probably find we get upticks in a minute and the next leg will start. Yeah, looks good for upside today, but we haven't broken out properly yet. NASDAQ, we're still in that sort of 30 minutes. We've not gone anywhere yet, so we need to break that high and get everything moving together. Struggling at the moment. So from an RSI perspective, Those are the only 2 4 hours. The only hourly we've got is your Euro odd. That's extended to the downside. We've looked at this one already because it's an ADR extension. So we're down at these previous week's lows. So looking for a pullback on this. It's either going to continue in that range or we're going to break down. So either way, we would expect a pullback and drop. So nice extension. I'll be getting into this one today. Next 5-minute reversal, I'll be getting long. We're back down here because the chart hasn't updated. Hasn't quite made a new low. So yeah, you're getting in long there, looking for a push back up into that accumulation. When it decides to trigger, but it's not at the moment because that is below the 25 level now. So there you go. There's your RSIs. ADRs we've already covered. There's quite a few of those today. We're a bit stuck, aren't we? Sorry, I'm just watching this. There's a lot of volume coming in. I don't know if you can see on the screen. To zoom in a bit. These candles are really jittery. There's a lot of volume coming in, which I was just going to say means there's normally a move about to start. So if we break that high on the NASDAQ, we'll probably get a pop. If we get that pop, everything will just go at the same time. But as you can see, you can hear this. They're buying into an order at the moment, which is just getting absorbed over and over and over and over again. So if they keep buying into that order and they can't get through, they will just flip, turn back the other way and run. Stuck. What's the largest losses you've seen from backtesting on SIH? It depends on how you're. There we go, broken out the highs. It depends on what you're using for testing. So I just got to close one, NASDAQ. NASDAQ's on its way to 2R target, which is, I'm just shy of 2R target over here. So I'm just getting ready to close it. Not while the buyers are coming in, I'm not, but. So close. It's sitting on my TP, bouncing off my TP. I'm closing. So just closing that NASDAQ. So that trade there that I closed early here on that account, I didn't. I've just closed it at TP. Just shy of, just in case. I'm just going to quickly go flat on the Dow as well because and I've got a hedge on the Dow, which I'm just going to shut. So I've got the S&P running long still. That's close to target, which is there. And I've got one runner running on the NASDAQ. Up 3.1% with 4% open. What's my losses? Yeah, so basically it depends on what you're using. So if you look at the back testing, I've managed to get losses of 20k in one instrument on one day. So you can produce losses, depending on how you're setting the strategy up. So there's a 7 grand loss there, but that's on the back of 2 6k days. So then we got a 3.5K, £2,000 loss, £2.5 loss, £2,000 loss, 3K win, 2.5. Yeah, if you let the EA just play out and do its thing 100% on what it's told to do, you can lose 25 grand in a day. But that is on news days, which is why I'm very cautious on news days, because the big losses that you can produce are when you get in to an aggressive exit that fails and moves against you by roughly an ADR. That only happens on news days. You don't get 200 ADR days normally. There has to be a news event which causes that. So days when you FOMC, right, today, if you get into the NASDAQ today, this is the DAX, but let's say, for example, this was the NASDAQ, and it broke down today and you got down to there, you took your profit. This is trading 4R. This was an experiment. So, you know, I wouldn't use any of these settings because it was just really to get screenshots, really. TP hit on the S&P. 2R hit on the S&P. Locked in. So I've got two runners running on the NASDAQ and the S&P long. So yeah, you can lose a lot if you get into an aggressive position. But what I'm doing, and you see me do it in here all the time, is I'm adjusting targets and I'm trading. I'm using the EA to get me into positions. The days where we just get lovely runs, we just make money. The days where we get hedged, I'm being clever. I'm being intelligent. I'm not being a robot. The robot was told to get to 4R, take profit, and then take another 2 positions long to try and get out. It did. But there was a news event coming this day, which caused a 200% ADR move. If I'd have known on this day and I was watching this and I saw this get into an additional position long, it actually got into it there, look. So it took profit there, moved down, took another position long on. I would have a hedge sitting there to lock in a little bit more loss. I wouldn't have taken 24K. But if you let something run completely wild, it will do what it's told to do. Every day, the rules that you tell an EA to use are going to give you a different result. I'm sitting over here now having banked 5.15% today. I'm sitting here having banked 2.71%. I'm trading exactly the same strategy on 2 accounts. Yeah. It's fast. It's, you know, you can't, I don't think you can take into account backtest results, because they're not what you're going to get in the real world. You're going to get something different. I should have let all this run today and I should be sitting on 5% here, but I'm not, because I'm a human being. But that's the largest loss I've seen, is about 20K. But that 20K loss, yeah, that backtest, so that backtest you just saw there was running on a target of 4R, and it wasn't a profitable set. So, but that test there ran for 3 years. Yeah, it came out more than doubling the account, even though it took 20K losses every now and again. We're on big news days. There's about 10 of them, 10, 20K losses in there. It still came out profitable, because all the other 7K win, 7K win, 7K win, 5K win, 3K loss, 7K, all added up to a massive profit overall. So you're going to take losses, but you've got to limit those losses. How to do it? Don't know. Just got to figure out what's going on. If we give you an example, right? At the moment, I've got 2 longs on over there. That's all still running. If I was hedged on this, which I would be now, because we broke short, I decided to get out of those because I didn't like the look of what was going on with the other instruments. That one would be hedged. If an hour before FOMC, this was still hedged, I would shut it. I would not gamble on FOMC, because FOMC could move 200% ADR and turn that into a huge, huge loss. I would shut it, but the EA would let it run. Yeah, 6:30 tonight, it's all going to kick off. Yeah, if you're in a trade at 6:30, you're either going to get stopped out or you're going to hit profit. If you're in a hedge, whatever's going to happen is going to happen. Yeah. So you just got to kind of use your head a little bit. I'm just going to turn tick strike off because I don't need it anymore. Euro odd 150 ADR, New Zealand CAD 125 ADR. So these are still motoring, these New Zealand dollar pairs. Flying, look. New Zealand dollar, US dollar, pretty much back to break even. Not far away from target on that. Oil stuck. What do you mean with here? Do you have an indicator for that? That was tick strike. So that ticking you're hearing is basically orders being placed into the market. I'll just turn it up a bit louder. Wait for it to tick. Okay, so that's a load of sell orders hitting the market, right? So I have just seen over at the corner of my eye, but I was going to say, I can tell there's a down candle happening at the moment because that sell orders hitting the market. So this is just an audible version of the pits. So it's what they call open outcry. So in the markets, when you could hear when the market volume and volatility was picking up because more people would shout. You would hear more people shouting sell, buy, different prices. Tick strike replicates the pit in the fact that you can hear there's a load of selling going on. If you're long on something, you probably want to protect your capital. If you can hear nothing but negative ticks and you're long, it's not going your way, is it? If you can see visually price pushing down, but you can't hear any ticks, it means that that's probably a pullback by the buyers and it's going to probably pop up again. And if you hear positive ticks coming in after you've had a little bit of a pullback, you know you've got the buyers on side. So it helps you, specifically in futures. I don't use it much. I just use it today because it's fun to use it every now and again. But it's really useful in futures because in futures, you can see the orders in the market. You can see, obviously, you've got a volume profile, you've got a volume weighted average price, you've got a point of control. Oil inventories are out at 0.77 off of 1.8. That's a big positive for oil. Well, it should be a big positive for oil. Whether or not the market decides to do anything with it, we'll find out. But in futures, it's really useful because you can see the orders on the platform. So when you get to a batch of orders and you suddenly hear the buyers stop, or you hear a load of sellers come in, or you hear the buyers buying like crazy, but you don't see any price movement through that block of orders, you know that there's an iceberg order there and the buyers aren't getting through it. If the buyers aren't getting through it, you want to get out of your longs because it's going to flip. So it's used a lot. If you hear a lot of stock traders, if you watch any stock traders on YouTube, you hear a lot of stock traders using it. Just adds another dimension, visual and audio. If those two don't add up, there's something not right. So if I see the market rallying hard and I hear sellers, I know that that is not real buyers and it's probably going to turn into a bearish shooting star and go back the other way. So it's just a confirmation indicator, really. Just going flat on the other account. Slightly over leveraged today. 10%. Bit naughty, but hey. We're just starting to pull back potentially, so that's why I've just exited those positions, just taking the profit. UJ coming down. So oil's not really having a reaction to the inventories today. It's gone quiet. UJ is not. UJ coming down a bit, Peter. Am I looking at the wrong? That chart's not updated. Yeah, no, you're right. There we go. So yeah, big push down on the US dollar yen. Let's just see if that's the US dollar selling off. Yeah, this is US dollar selling off ahead. New Zealand dollar CAD 125 ADR to the upside. Canadian dollar weakening, US dollar weakening. This is all movement ahead of FOMC, I suspect. Getting ready for tonight. Whether or not that is a legitimate move or not, we'll find out later. New Zealand dollar Swiss ADR, so that is still rallying. New Zealand dollar Swiss is coming up to a propulsion gap. Not a very good one. It's kind of part of a sideways move. We did accumulate after it and stay below it. So we might find some sellers coming in because that's where they started that move, or rather they paused that move before they went down for the second leg. So we might find some sell orders in there. Fingers itchy, Brian. Are you not done for the day? You should be done for the day now. You've got itchy fingers. Itchy fingers cause losses. I'm also wondering on your specific settings how bad the SIH gets on losses. Backtest it, AZ. Backtest it yourself. Where are we? Yeah, I mean, I would just backtest it yourself and see what that's default settings for the DAX. DAX. Just seeing if it does any big dips. Weights are working, but I removed my weight, so it shouldn't be in theory, should it, Evans? First day back, funeral yesterday. Oh dear, don't get itchy trigger fingers. What are you targeting, Aussie, New Zealand? They're all just normal losses by the looks of things. Got feeling, yeah. This isn't the stock index Hedge EA. This is a development version. So I don't actually know if that is the right settings or if that's even the right EA. I'm just thinking about it. Because I've just noticed there's an extra input in there for amount of money risk, which I was developing another version of it. That's not the right version. But yeah, I mean, there's a loss there, look. That went from 11.3 down to 7.3. So that was a 4K loss there. Big loss. So that would have been a big day. So if you look at that day, whenever that was, when that big loss happened. Went down to about 7, didn't it? There. 15th of December 2022. What's my target short? My target short on this is all the way down in propulsion on Aussie New Zealand. I don't think it's going to get there necessarily. That's my average at 150 ADR. So I'm going to play this one by ear because I don't know. Just waiting to see if it moves anywhere because it hasn't gone anywhere for a week. Aussie US 125 ADR, US dollar still coming down hard. So I was just going to look at the 15th of December on the DAX. That day there, look. So that was that massive loss. So it got hedged. Target would have been somewhere around there, and then it went into drawdown down there. So that was a 339-point move. ADR is 173. So again, 200% ADR. Those big losing days are where you get 200 ADR moves. 200 ADR moves very rarely happen apart from news. So if you look at the 15th of December on Forex Factory, which we're not going to be able to do, I don't think there's a search function, is there? Oh, yes, there is. Look. Oh, look at this. Handy. 15th of December. There you go. That was the SMB interest rate and the pound interest rate and the euro interest rate and retail sales for the US dollar, followed by the ECB press conference. Yeah. So that is why we had a 200 ADR move on that day. And that is why that took a massive loss on that day, because you were trading around all of this news, 2 interest rate announcements back to back. Sorry, 3 interest rate announcements back to back. 8:30, 12, 1:15, Swiss, pound, euro, all of them driving price in one direction on the DAX. So that day you would go, screw this, I'm out. As Brian just said, need some more aircraft news. Yeah, so you've just got to use your head. And this is why I keep saying backtesting is going to give you an example of normal behavior. It's not going to give you what is going to happen in the real world, because if you're sitting there on the DAX and something is moved down 1.5 ADR and there's a news event coming out like today in 5 minutes, I went, screw this, I'm closing that because there's a news event coming up. So I banked 1.5 R instead of letting it get to my 2 R. What the EA would have done is let it get to that 1.5 R and gone, I've no idea about the news event, and I don't know whether it's high impact enough or whether you're bothered about it and what your P&L is like and if you've made any more money on anything else today. So therefore, I'm going to stay exactly where I am and I'm just going to move 200% ADR down. Not going to happen to me because I'm not stupid enough to let it do it. But if you put a news filter on something, you will tell it not to trade certain news events. That's fine. But what happens if you've hit 2R, right? You've got a break-even trade on and the news event's about to come. You would close it probably, wouldn't you? Or you would move that up to 1R to lock that profit in. The EA will do something completely different. So you can filter out news, but which news do you filter out? Red, orange, yellow, all of it, none of it, just the red, just the interest rates, just the inflation figures. What about unemployment? Which ones do you filter out? Which ones move it? You know, there's too many variables, which is why backtesting is just rough. Everything's rough. I'm considering converting from position trading to SIH. Seems so much less stressful, not holding things overnight. Yeah. News is going to affect it. Look at the DAX today. I mean, look at this thing today out of the opening range break. I mean, it's just, you know, we've got news today, but we haven't hit ADR yet, but we haven't got to FOMC yet. When FOMC hits, that's going to go mental. Sam, I'm not talking to you. What is news? It's this thing that we pay attention to because it drives the markets up and down. I seriously think you've landed in the wrong group, mate. You're looking for an accountant spreadsheet group, aren't you? You've landed in a trading group. We talk about different stuff. We talk about making money here. What do I find more stressful, position trading or SIH? Neither, really. They're different. They're not the same thing, are they? The hedging strategy can produce very consistent results. Yeah. So I mean, if you look at the P&L, 2.7%, 2.6, 5.97, 0.47, 4%. Yeah, it's consistent, but it will also have big losing days of 7%. How do you handle a 7% losing day? I can't answer that question. I handle it in just it's one of those things that happens. With position trading, I've been doing it for such a long time. I don't find this stressful because it's just normal to me now. My normal has changed from losing over and over and over again to winning a nice big winner, to losing over again to winning a nice big winner, to being used to sitting in somewhere between 5 to 15% of drawdown pretty much all the time. So this is comfortable for me. If this is sitting at 15%, it's just 15% of drawdown. I've got 100% to use. So I'm working at 15% of my 100%. It's not uncomfortable for me, but for other people, this is hideously uncomfortable. I can't really answer that. What you find more stressful or what you find more uncomfortable is a decision you can only make yourself. Whether I find it uncomfortable or stressful is irrelevant. Some people get stressed driving a car. You know, it's a job at the end of the day to produce green. That's how you do it and which you find more stressful. Don't know. Panic. Some people panic, and I know who the people are that panic sometimes, because I will be sitting here and doing a live room. I'll get stuck in a hedge in the morning, and then I'll go, right, okay, we'll have a look at that when I come back in the afternoon. The Telegram group, suddenly people are like, what are you doing? What are you doing? What are you doing? I can tell they're stressed about the position. They're in a hedge. They don't like being in a hedge. They don't like having a locked-in loss. They're stressed about it. Other people aren't mentioning anything. They're obviously not stressed about it. You've just got to try it. Find out if it stresses you out or not. Try it with a small account. Try it with like that account that I'm running over there, which started at $750 and is now sitting at 900 and something. Try it on a small account and see how stressful you find it. Obviously, when you go up to a bigger account, it gets more stressful. The more money is involved. Nearing ADR on US dollar yen. Starting that pullback. So let me go. Let me go and find my comment. There we go. Here it is. This is what I posted in Telegram yesterday at 4:53 yesterday afternoon. 50% at least of this move will be retraced within the next 48 hours. Stick a line on your chart at that level and we'll look again on Friday. It's only Wednesday. Yeah. That's where I said we'd be by Friday. These moves, they have to be profit taked. You have to. The banks have got so much money on the table. Always come back down again. Whether or not we get there today we'll obviously have to wait and see. But yeah, coming down nicely at the moment. I think it's just because recently I've struggled with patience on position trading. I seem to be fine when I'm in 3% of drawdown on a position, but as soon as I'm in 1% in profit, I'm looking to get out. That's exactly what you should be, though, AZ. You should be looking to get out 1% profit. That's the thing. It's position trading is all about living in here. You've got to switch your mindset, and it's very difficult to do. You've got to switch your mindset from trying to make a lot of money to just making money. Yeah. So this is working capital. Yeah. So think of your account as a business, as a loan. So I've started up a business in trading. I've borrowed $15,000, whatever your capital is, right? When you open your business, you don't open your business with $15,000 sitting in the bank. You open your business with $3,000 sitting in the bank because you've spent $12,000 starting your business. You've had to fit your shop out. You've had to do some marketing. You've had to employ a couple of people of staff. You've had to buy some stock. You've had to do whatever you've got to do to start your business up. So you're left with that, right? When you start trading, you start with zero drawdown. Yeah. As you start your business, you go into drawdown on your business because to be able to make money, you need to put risk into the market. Risk is drawdown. Your account has 100% risk, right? 100% drawdown available on it. Drawing down into it is just part of business. Your goal is not to draw down by 6% and make 12%. Your goal is to, when something gets green, put it down there. If it gets green by 0.25% or 0.5%, put it down there because it could easily vanish tomorrow or this afternoon or in the next hour. So if you want to put that in the bank, put that in the bank. What have you just done? Made money. Well done. Business is working. That's it. You don't worry about drawdown. If you go into, I'm in 2.27% of drawdown on oil at the moment. I was in 4% of drawdown on that yesterday. I'm not sitting here going, right, I've got to make sure I get 8% profit out of this because I went 4% into drawdown. I'm thinking I need to get this down there. At the moment, I can bank $900, which is 0.9% on my account if I want to. I'm not worried about what the drawdown is. The drawdown is just a cost of doing business. Every business has costs. The costs do not have to be, in this case, in this business, half of what your profits are. Yeah. If I go into drawdown by 15% on my account, I'm not sitting here going, Christ, I've got to make 30% this month. I'm in 15% of drawdown. When that gets back to whatever, I put it down there and I'll take what I take. Got to get out of the risk reward mindset, which is what everybody's trained to do. Everyone's taught and brainwashed into, you must have risk reward as a positive. So if you risk 1%, you must make 1.5%. Otherwise, you're going to fail at trading. It doesn't work with position trading. You can draw down 100% on, well, you can't draw 100%. You can draw down 50% on your account. And if it moves up 1%, you can bank that 1% and go, I made 1%. I just used a lot of my capital to make it. That's totally different to that. And you will sit, and that's the bit that everybody struggles with. I can't get my head around the fact that I sit in drawdown for a week and a half at 1 to 2%, and then I just bank 0.5%. But if you can bank 0.5% a day, you're making 10% a month. If you're making 10% a month, you're better than 95% of traders out there. All you've got to do, isn't it? Make 10% a month. All of a sudden you go, shh, I've made 10% a month for 3 months running. I'm profitable. Now you've got the confidence to put 100 grand in the bank and do this properly. But you've got to get the confidence to do it first. And it's just getting used to sitting in drawdown. That's the mindset change, which is very hard. Totally different to stock index hedge. Stock index hedge, we're looking to grab a very small profit with a very high risk very, very quickly. Much more stressful, most people find it, because you're sitting there at the open going, please break, please break, please break. Oh, hedged. Please break, hedged. Please break. Excellent. Please break. Excellent. Okay, so I've banked there. I'll shut these two out because I don't care. They're hedged, whatever. I've made money on those two, and these two are bigger profit than that. Your goal when you're doing stock index hedge is to play these all off against each other to come out at the end of the day with a positive result. It's a totally different game, totally different mindset, totally different stress levels, totally different comfort levels. Got to do both. Try both. You might hate one, love both. If you love both, even better. Make more money. Impossible to tell, isn't it? Impossible to answer that question until you've done it. If you're risking only 0.1%, how do you get 7% drawdown on your hedge strategy? I'm not. Who said I was risking 0.1%? On the hedging strategy, I'm not. I'm risking 1% per trade. Position trading, I'm risking 0.1% per trade on a position. Totally different risk profile. This thing, right? I hit the sell button here, and if this moves up by 1 ADR, worst case scenario is I'm going to go into 0.25% of drawdown in my account. Oh no. Yeah, I couldn't give a monkeys. If this wants to hit 152 this afternoon, it's going to cost me $250. It's a different risk profile. You're building positions in the market and waiting for price to come into your profit areas. Hedging is good, helps you breathe. Yeah, that's the beauty of hedging. That's the beauty of the hedging strategy. Is you know, if you get hedged, you just go, oh, what a pain in the ass. That's it. That is your mindset. I've locked in a 1% loss. Worst thing that can happen to me right now is a 1% loss. Unless it goes mental, hits my target, then I have to deal with it. But if it's not going to go mental and hit my target, just breathe. Wait. Yeep, did you say? What? A lot of traders, especially new, are not patient. No. Patience is the hardest thing. It's one of those things, you know, when people put these things together where you go back 10 years and tell yourself what you need to do. Patience is one of those things I would go, patient. You got to be patient. But you're not patient, are you? Because you need to make money. Most people are doing this because they need to make money now, not need to learn how to do this and make money in 2 years' time. Good areas to get out of the Dow. We're certainly rejecting by the looks of things. Oops. Grab it. Not that. Oh my God, go away. So yeah. Potentially. So got a very nice rejection at that level. Buyers have tried to push again, failed. Buyers are trying to push again. The price action is bullish. Then we suddenly go bearish. Then we try and buy and fail. So the last 10 minutes, the sellers are in control. At the moment, that is what the buyers have got to beat to take control of the market. If we put in a lower high on this candle in the next 3 minutes, we know the sellers are fully in control at the moment, aren't they? Whether they're going to still be in control on the next candle, we don't know. But at the moment, we're an inside bar. So there's indecision. We're stalling. So if you are long, if you are hedged on the Dow, this is not a bad area to take profit on your longs potentially. Where is the open? Here somewhere, wasn't it? Broke long, didn't we? So if you are hedged somewhere around here, you could exit your longs there and wait for a pullback into yesterday's high or into the high of that push to exit your shorts. Whether it works or not, I don't know. But what's the worst thing that can happen? It can push up again. What can you do? Hedge it again. Yeah. So if you get out of your longs now and enter more shorts to try and get out quickly, or just wait for this to pull back naturally without getting an aggressive exit. If it continues to push up, you can put 2 buy orders there and just re-hedge it, and you're going to lock in that much loss and whatever your hedge is down there. So it's 2 times the loss. Same as taking 2 stop losses. No different. Gold, you can look at gold. I haven't had John Wick out for a while. Let's get a John Wick out. We'll have the coin today. Gold. That's not gold. That's gold. No, that's not gold. That's a Lamborghini. Gold. That's what we want. So, obviously, gold is a US dollar cross. Therefore, if the US dollar is going down, gold is going up. If US dollar is going up, gold is going down. At the moment, it's not going anywhere. We're stuck. So that high has been supported. So that's your range low at ADR. Range high is 125 ADR. So you've just been moving within ADR for the last 2 weeks. No idea where it's going. If you want to take a trade on this today, literally, best thing you can do is flip a coin, because this evening at FOMC, this is either going to go like that or like that. Somewhere between 6 and 7 o'clock this evening, you're going to get a big, strong move. Which way it's going to go is completely random based on what the Fed say this evening. So I don't trade it, so I can't really give you any advice on it. Not that I'm a financial advisor. I'm just a bloke that trades. Afternoon, Hamza. Peter, I am the opposite. When I'm stressed, you won't know about me. When I'm typing, then you know I'm okay. Yeah. Everybody's different. This is the point. This is what I keep saying in the bootcamp. I don't keep saying in the bootcamp. This is what I say in the bootcamp. You know, everybody has got a different pressure point. So, you know, when do you get out of a trade, or when do you start doing drawdown, or when do you start doing aggressive drawdown control? What percentage is it for you? It's totally different for every person. And it's also, if I get to like 3%, I'm thinking, I need to do something about this. However, if I'm getting to 3% and I've got 15% banked here, I'm looking at it going, I might do something about this soon, because I've got no pressure. Because I've banked 15% and I could shut the whole thing out and go, screw you, I'm walking away. And I will just walk away with 12%. However, if I get to 3% drawdown on something and I'm sitting at minus 1.5% on the month and we're 2 weeks in, damn right, I'm probably going to do aggressive drawdown control on that. Do you see what I mean? This is what I tried to say in the bootcamp. Everybody's pain point, pressure point, drawdown control, aggressive drawdown control, point where they close it, point where they walk away, point when they do something, bank it, is going to be different. But it's not different because of you as a person now. It's different because of you as a person now with that much leverage on and that much banked. That has an impact on what decisions you make there. Which is why whenever you backtest something, you're never going to get the same result, because the decision you make, the decisions I made today on these trades were based purely on how is my P&L looking today. If that P&L had been flat or a negative 1% this morning from the DAX, the decisions I made today would have been different. But what I wanted to do today was protect the capital that I'd won. So I decided to get out early. But if I hadn't had any capital banked, I probably would have let those run to bank some more capital. So you're going to make different decisions. And everybody's going to be different stress levels. Some people will go to bed at night if they're in 10% drawdown on their account. They won't be able to sleep. If that was me, I would never sleep, would I? Because I'm always in 10% of drawdown. And I've had sleepless nights before with accounts in the past. I've had accounts which have been sitting in 20, 25% drawdown. Then I start to think, what the hell is going on? And it happens every now and again. But you can always get out, can't you? Worst thing you can do is shut down the trades. What are your thoughts on using PT strat for props? Using tiny lot sizes? You can do. It's very hard. It takes a long time. And look at this. I'm using 0.1% risk, and I've blown the. If this was prop, it's blown, isn't it? I banked 22% last month, but as far as prop are concerned, you've blown it. This is the problem with prop. It's all rigged and geared against you as a trader, because every trader is going to have a negative result, and every trader is going to go into drawdown a little bit more than they want to. But every trader that's good is going to come out of it on top at the end. But prop have rules that mean if you don't do exactly as they say, it's all gone wrong, isn't it? I'm sitting here going, I don't give a monkeys. I made 22% last month. I'm sitting in 7% of drawdown. I've banked 1% today. Worst case scenario now, I could shut that whole lot down and walk away with 15% over 2 months. Prop, not interested. Because I'm making money. Prop aren't interested in me making money. They're interested in my evaluation fee. All they want. That's the business model. That's why business people run props, not traders. You got a guy that is an ex-professional hockey player running Take Profit Trader. Yeah, prop firm, futures prop firm. He's got an interest in futures prop firm. Do you think he's running it to help traders? No, he's a multimillionaire ex-hockey player. He's got to put his money into some new investment to make money because he's retired from hockey. Not doing it because he wants to find talented traders, is he? Not interested. So to ask it in a different way, what's the more dangerous strategy? I don't know. Position trading. Because position trading, you can blow your account. If you just let this go and say you can blow your account, you'll find it very, very, very hard to blow your account. But if you over leverage and get too excited, you could blow your account because you're not using a stop loss. If something went against you indefinitely, yes. Or if there was a Swiss franc peg removal or something, black swan event, you could get into massive trouble, couldn't you? So that's more dangerous. But then I would argue that a stop loss is not going to get honored in a black swan event anyway. So it's just as dangerous as not using a stop loss. I can't answer that question. AZ, you've got to go and do it yourself. Right now, I'm thinking if I was on stock index hedge, I'd be looking at 4 instruments instead of 28. I'd be on for 1 hour in the morning and 1 hour in the afternoon, and I'm done. Yeah. I'm done. I was done by whenever I was done today. When did I close that out? 5, 10, 15, 20, 25, 30 minutes. I was done on the NASDAQ in 30 minutes. I was done on that in 20 minutes. I was done on that in 15 minutes. Done. But I will have days, and you've seen me in here have days where we get hedged there, we get hedged there, we get hedged there, and I sit there going, Christ, I've got to manage these all afternoon. I'd be sitting here at 5:30 going, I've got to go to my spin class in a minute. I'm still hedged. It's not all sweetness and light, is it? But when it works, it's done for the day, isn't it? If you were to start a prop firm, what would you do differently? Nothing. Prop firms are there to make money. I'd be making money. I'd be doing exactly the same as the other prop firms are doing, putting as much money as possible into marketing to get poor mugs in to come and buy a demo account from me. And then watch them go through phase 1, go through phase 2, get funded, not get to payout stage and blow their account. And then I'd get them to take another prop evaluation because I'd give them 20% off. I'd be milking it. I'd be sitting on a beach. As the guy from My Forex Funds is with his 300,000 while he's being chased by the Fed. There's nothing you can do differently. Overall, how profitable is the SIH EA? Well, it did 42% last month. But the question, Hamza, is how profitable am I? The SIH EA just takes trades. I have no idea if you let it run on full autopilot what it would have done last month. I can show you what it would have done last month. I can't, not in there. I've no idea what it would have done last month. If you let it run on full autopilot last month, where are we? 1st of October. I haven't got data to the 31st of October. I've only got data to the 10th. I can show you a month. And this is just the DAX. Right, so might have got out of that, I don't know. May or may not have got out of that. So it made $350 that day. It got hedged that day. I've got these moving averages on the chart. I was obviously testing something to do with moving averages. Hedged on that day. Clean break that day. Didn't quite hit target. Right, so prime example, yeah? Missed it. Stop. Prime example. That day, there is no way I would not have taken that trade, right? This is the difference between full automation and semi-automation. This is why I'm not an advocate of full automation with any EA. That broke short. Came down, came back to break even, sat there for 25 minutes and then went down. It then missed TP by a pip at a previous day's low and then put in a bull candle. It put in a hammer. I would never have let that run. I would have taken that off and gone, thank you very much, 1.75% times 2 in my pocket. This lost whatever that hedge was, $250 that day. Yeah. How did the stock index hedge do? That day it was a loser. For me, it was a 3.5% gain. So I can't, we can look at this as much as you like, but I'm never going to do what this does. I'm never going to let that thing just carry on going. I'm right now looking at this trade going, okay, that TP is valid. Why? Because it's above that high and that high. If we're pushing down today, price is going to come down. It's going to bounce off of ADR low. That's what I'm thinking right now. That is what I would have done on this day. I've no idea what this is going to do. Let's have a look. TP, right? And out. $207 profit. That is exactly what I just said was going to happen. Because as a trader, I've seen that happen a million times. The EA will just do what the EA does. In this case, it did what I wanted it to do because that's what I would have done in this case. But you see what the difference is between letting this thing run on full auto and somebody watching this thing. You've got to be able to be aware of what's going on in the market, what market conditions. Is there a news event happening today? There's so much going on. You can't just let this thing run on full auto. I mean, it's in profit, marginally. But add that 3.5% that it lost. So when it made that loss there, I actually made a profit. Now that P&L is very different, isn't it? I'm never going to say to somebody, stick this on the chart and walk away and don't ever come back and look at it. I'm going to tell them to use it as a tool, which is what it is. Do you trade the SIH on a VPS? No. because I'm here trading, but if you can't watch the charts, you need to have it on a VPS. But I would say if you're going to stick this on a VPS and just let it do its thing and not look at it, you're not going to get the best results out of it, are you? There's no need to run this on a VPS because I'm just sitting here trading it. So I'm just coming down from the highs. The market reversal alert CA, which is running all this, that has to run on a VPS because it's managing positions over days and weeks, whereas the stock index hedge is getting in and out in half an hour, or however long it takes. So this doesn't need to run on a VPS because I'm here watching this thing at the open go, so it just runs on my terminal. If you want to run it on a VPS, you can do, but if you're going to watch it, what's the point? Just run it on the computer you're sitting in front of. There's no advantage to running it on a VPS unless your VPS is sitting next door to your broker and you're going to get a latency reduction, which is just not going to make any difference. Did I miss why you're not in pound yen? Not in pound yen. So yeah, I'm not running. The market reverse alert CA is turned off on all yen pairs because I'm in US dollar yen. I'm not overexposing on the yen because I'm in US dollar yen. So I turned the market reverse alert CA off on all yen pairs. But if you'd have got in on that one, well done. Yeah, I'm not trading anything else yen at the moment because if it pushes and we have to wait for that intervention move, I do not want to go into drawdown on a load of yen. Just exposure. Afternoon, Amar. 42% madness. Yeah, it is madness. We covered it this morning in the live room. God, why is everything miles away? That's October. So that's the first month running it, basically 42K. And that is all of the individual instruments. So all 4 instruments made profit. 1,700 on NASDAQ, 12 grand on S&P, 16 grand on DOW, and 12 on DAX. But as a portfolio approach, i.e. making decisions based on whether or not, if you've made, and this, again, this is something that an EA cannot do. This morning, I had a nice profit on the DAX. You can't see that's behind my head. I had a nice profit on the DAX this morning. There. So that was the opening range break today, straight down to target. Stopped out, unfortunately, on the second half. It could have been a much bigger day today, but got stopped out on the break even. But because I'd banked on the DAX today, when we came to the US Open today, my decision-making process was different because I had money in the bank to protect. So I got out quick there when I didn't like price action because I wasn't under pressure to make lots of money. I was under pressure to keep the money that I've made this morning. If I hadn't made money on the DAX because I hadn't traded it this morning, the decision-making process on the NASDAQ, the S&P, and the Dow is going to be different. The key to the opening range breakout strategy and the hedging strategy is to treat these 4 as a portfolio, because your goal is to make money. And if this has made money, this is making a loss, this is making a loss, and this has made money, if the amount of those 2 is greater than those 2, your day is a win. That's all you want, isn't it? You want to win every day. The ideal is to have this P&L. Green, 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 green. The only way you're going to achieve that is if that makes 1%, that makes 1%, that one is sitting in minus 0.2%, and that one is sitting in minus 0.5%. It makes total sense to close those 2 before they get worse, because these 2 have banked you your mortgage today. Again, you cannot teach an EA to make that decision because you don't know what you need to bank. It doesn't know what you need to bank. You do. You've got to be the trader. But that is not going to happen every month. That 42%, that's the first month. I've no idea what this month's going to be. This month could be a 10% loss. I've no idea. Yeah, this is the same as any other trading strategy. It's going to have losing streaks, I'm sure. If it hasn't, I've found the Holy Grail, and I'm going to stop doing streams because I don't want to share it with anybody else. If only. Bit of US dollar strength, indices coming down. Yeah. Not a lot, though. It's more of a pullback, isn't it, on this US dollar weakness? At the moment, oil's starting to come down. So oil's pulling back out of the highs. That level there. So hopefully this holds and we get a pullback push. Can't expect perfection in trading. It will burn you every time. Yeah. You're never going to get it right every time. Am I taking a break from the pound US? No. Just haven't had any setups on the pound US. So since I got out, I haven't had any setups. You kind of got one, this one last week. The reversal alert came after the RSI came back out of extension, so that didn't trigger a trade. That one would have worked nicely, but it didn't trigger a trade. If you were taking the 70 instead of the 75, you had a nice short out of that, but I haven't had a setup on it since I got out. So it's not that I'm not trading it. I just haven't had an entry, which I'm quite pleased about, to be honest. Oh, yes, new month, isn't it? Of course it is. Yes, it's not showing in my old trades, is it? Yeah, so that's where I got out, look, on the 23rd of October. Oh, no, I have had a trade, sorry. No, I have. I did get that one, look, sorry. Tell a lie. I did get that one on. And I got out in that propulsion gap, yeah. So I've only had that one setup. That's it. There was something else that triggered that didn't trigger a trade. I can't remember what it was. We had another RSI extension, which was literally just on the line. And the EA didn't get it on. I can't remember what pair it was, but there was something that we didn't get an entry on. I can't remember which one it was. Anyway, I'll leave it there today. So finished basically on the indices, so there's nothing to look at there. Just waiting for this lot to play out, really, and see where we go. Hopefully oil doesn't pull back and we're not going to get a double top on this. I'm watching this. So basically, I've got my stops down here. This is my point of no return on oil. If we break that level, I'm going to give it a little bit of room, half an ADR below that low. If it pushes down more than that, I'm out of these two positions, and I'm going to make a decision on what to do with this, because if this does break down below this low, there's something wrong. And this conflict in the Middle East is not affecting oil in a positive manner as we would expect. So that's the only thing I've got stops on, the only thing that I've got that I'm worried about at the moment. Everything else is just waiting to play out. So this evening, obviously, 6 o'clock, we've got FOMC. So we will get a little bit of volatility off that. The only way that is going to make us go crazy over ADR is if that comes out at 5.25 or 5.75. Very unlikely. You never know. It's the Fed. They can do what they like. But there's not been any mutterings at all about any movement off of the interest rates. So that's where we're going to get the movement this afternoon, or this evening rather, is on the press conference, if we get any. So the Fed might talk up or down interest rates. And if they talk down interest rates anywhere before Q4 next year, we might see some weakness start to creep into the US dollar. Other than that, I don't think we're going to get a huge impact out of this tonight. Famous last words. Watch us analysing a 300 ADR move on the US dollar in the morning. But at the moment, the market's not interested in US dollar buying because obviously we're in the wrong market state for buying the US at the minute. But we'll see what happens. So it looks like it's rallying a little bit at the moment. All right, so I'll leave it there today. I'll be back tomorrow morning, 7:50 for the Frankfurt session as usual, and 1:20 tomorrow afternoon for New York. I'll be in Telegram if you need anything up until then. And good luck with FOMC. Hopefully it goes the right way. For me, I want it to go down. But yeah, we'll see where it goes, and we'll have a look at it all in the morning and see what the Fed have said about future movement. So, all right, so have a good evening. Good luck with FOMC, and I will be back tomorrow. And have a good one till then.